Mortgage term, volume 3. First term is closing agent. Closing agent is basically escrow officer that handle the closing of a transaction, the real estate transaction. That's what the closing agent is. 2. Loan estimate. Loan estimate is a document that consists of 3 pages to show payment, cost, and terms of the loan. And we'll show some examples. Here is the loan estimate. So what does the loan estimate? First, the first page, it talks about a little bit the term, 30-year purchase, fixed rate, type of loan, FHA, conventional, VA, and if the rate is locked or not, the address of the property, the name of the borrower, the loan, the sales price, and then the loan amount, the interest rate, the principal and interest payment, the tax and insurance added here. If there is mortgage insurance, it will show here the total payment. See, it tells you including tax and insurance, a closing cost, the down payment, cash to close, which is the down payment and the cost together. So that's the first page. Second page, it consists of the cost, which is origination point on the first section. Section A is origination point, everything that is made by the broker or the bank. Second section is items that borrower cannot shop for, which is the appraisal, credit report, flood certification. Third section, borrower can shop for, which is the escrow fee, title fees, and everything related to escrows and titles. And then the total. And then it goes on the right side, the tax information and the government fees, then the prepaid, which is for the impound, when they're having an impound, and then part of the escrow payment, basically part of the impound, how many, the initial payment, so the insurance is paid for 12 months, the taxes are paid for 6 months to cover the initial payment. And then if there is any title owners, here it's under other, whatever additional fees that are not usual, it will go under others, and that's the total. Then under this section, it will show the detail of the how much down payment, if there is any seller's credit, if there is anything, it will list it, and it will show the final figure on the second page. So the second page, it's all about the fees and the charges of the transaction. What we call is closing cost. So the total closing cost is here. See? That's the total closing cost. When we talk about closing costs on the next item, you remember that it's the line J is the total closing cost. And then the third page, the bank name, the mortgage broker name, some other information about the property, the things to consider. Basically, eye-opening for the borrower. And that's the loan estimate. Closing cost, we just saw it on the loan estimate, is on the second page, and it's the A plus B plus C plus D plus E, F, G, H, I, adding them all together. It will give us the J, which is the closing cost on the loan. So adding all the cost that is paid, excluding the down payment. What is a down payment? Down payment is basically, let's say, house for sale at 300,000. loan program is to put 20% down payment. Down payment would be 300k multiplied by 20% equal 60,000. That's the down payment. Earnest money deposit. Earnest money deposit is the initial escrow deposit when a purchase transaction starts. So a home buyer find a house, put offer, the offer get accepted, then when the buyer is going to open escrow, there is initial deposit of in general is 1% of the purchase to put to escrow, and that is a rule of thumb. Escrow escrow is escrow basically is the company that handle the middleman of a real estate transaction, and they are the connection of everyone in a transaction. Example: in a transaction, there is who is involved? Bank, buyer, seller, title company, mortgage broker, real estate agent, etc., etc. All are connected to the escrow company. Escrow will receive all the funds, and escrow will pay everyone. Settlement statement. Settlement statement is basically the loan estimate that is generated by the escrow company. It shows the buyer cost and the seller cost as well. Condominium is a condo, property that is a condominium. Property that is not not a house, and in a association, community. Credit report. Credit report is a report that show pretty much residence, the history of the following: residence of an individual, credit, either credit cards, personal loans, car loans, or home loans. Closed and open accounts. Shows any bad accounts like collections, charge-off, foreclosures. Shows the basically the records of the government records, like tax liens, bankruptcy, and any sort of lien. It shows employment history, and it shows work history. I know we've talked about employment history, and it shows all the different credit inquiries. Mean all the different credit pull are done for an individual in the last 12 months. Credit score. It's a score rating that appear on the credit, which evaluate the individual, the history of solid accounts that appear on credit, history of paying, length of time the credit been established, amount of inquiries will give the combination of all, combo of all will give us a amount of inquiries. The combo will give us a score that evaluate all the mentioned items above. Score can go from 350 to 900. And this is the terms, those are the terms on our volume 3 video. We'll see you on the next video.